Nvidia stock is down roughly 6% after hours. The main culprit is we did see Nvidia after hours announce that they are unable to ship the H20 to China due to new United States government regulations, and more importantly, because of that, they are going to take about a $5.5 billion charge associated with H20 products. Now, the company is losing about $170 billion of market cap at the moment, and many are wondering, Jose, if it's only getting a $5.5 billion charge, why is the company down $170 billion? So in today's episode, I want to take a closer look at everything we know, and at the end, I want to give some of the questions that I'm going to be curious about, especially with all the earnings coming up, and I don't think you want to miss that. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Now, what I want to do first is kind of understand everything and just kind of lay out all the information, and throughout the video, kind of start to share my overall thoughts and some evidence that we might have. So first, China is about $17 billion of this company's total revenue for fiscal year of 2025. Remember, the company made about $130 billion in revenue. So roughly about 13% of total revenue comes from China. Now, it is important to remember that not all that $17 billion is the H20. Nvidia does sell consumer GPUs. It does sell kind of GPU laptops as well. So all that can also be implemented into this market. But I think the biggest worry is that a big portion, and I would say yes, is most likely coming from the data center market. And is Nvidia going to lose out of that market? So first, we understand the total revenue that's coming out from China. We understand that it's not all H20, but it's probably driven mainly by the data center space. Now, what we did see is on April 9th, the United States government informed Nvidia that the company requires license for exports to China for the H20 product. Then in April 14th, the U.S. government informed that the license requirements will be in effect for indefinite future. So this is going to cause a loss of revenue for China because it's very unlikely for them to get many of these licenses. And that's the main thing, right? And export restrictions has always been a thing here with China, at least with the evolution of AI, because it is definitely, in my opinion, a national security risk, especially for AI. If AI is going to be as strong as it is, you want to somehow starve your enemies or the country that you believe is your biggest rival in the AI market. Now, there is maybe a problem when you starve them too much, and I think the H20 was kind of like that perfect middle where you weren't starving them completely, but you were still giving yourself the edge. Now, there are a lot of things that can go within the complete starvation of AI product to a country, and that's something that we might see the effect over time. But because of this, the company does expect for their first quarter, which ends on April 27, will include up to approximately $5.5 billion of charges associated with H20 products for inventory, purchase commitments, and related reserves. So it's not like the United States is fining Nvidia at all, but Nvidia probably had a lot of commitments for certain Chinese companies that they were going to provide this, and they had already built up that inventory as well, so they're going to have to write that off, and that's where we're kind of seeing this $5.5 billion in charges. Now, some people might be wondering, Jose, $5.5 billion in charges, why is the stock down roughly $170 billion in market cap? My best guess, and again, the market is pretty weird, but my best guess is the market is expecting this to be a total loss of revenue for a company. So China, we can see for that country. So we can see China is about $17 billion in fiscal year of 2025. Assuming, let's just do quick napkin math, assuming this is all H20, that's giving this a market cap of a market valuation of about price to sales ratio of 10. So if you time this by 10, you get your price to sales ratio, and that would be about 170 billion. Theoretically, it kind of makes sense in my head. The Chinese market is a lot more riskier, so you would give that portion of the market a lower valuation compared to the overall business. I do believe Nvidia's price to sell is trading at a much higher valuation, but their Chinese market, in theory, should be trading lower because it does have a lot more risk and it's probably a lot more competitive because they can't send the best of the best product. So some might be wondering, why is this taking that $170 billion market hit? Main reason is the future expectations and future revenue that was kind of priced in for this market. Now, some things that I think investors should take a closer look at is, has Nvidia been prepared for this? There were reports coming in as early as September 25th of 2024 that distributors claimed that Nvidia has allegedly stopped taking orders on HGX H20 GPU processors. So as we're going to see, that's going to be a question. Has Nvidia kind of been preparing for this already? The other thing is, we did see that Nvidia was seeing a strong demand from China local tech giants order up to $16 billion in AI accelerators amid the AI craze, most likely foreseeing that there was going to be some form of restriction. So they were trying to order as many chips as possible before this came out. Now, unfortunately, there were some reports that came out by the NPR earlier last week that the Trump administration backed off Nvidia's H20 crackdown after a $1 million dinner that Jensen had with Trump. Unfortunately, it seems that was a complete lie. But the real question is it a complete lie because it never happened or there was never a discussion? Or is Trump using this as a trade tactic? As I do believe today we saw that China did, let's just do rare earth. It did seem that China suspends rare earth exports, kneecapping U.S. industries, right? So is this just kind of a retaliation, even though previously maybe there were thoughts of not having this? The final thing I want to kind of take a closer look at are some of the questions that I might have for Nvidia and just with overall this H20 ban. So questions first, was Nvidia expecting this? If so, did they start to reduce their inventory of H20 and other China approved chips? In my opinion, this would be ideal, right? Because in theory, could this $5.5 billion charge have been much higher if Nvidia wasn't proactive with it? That's something that unfortunately we're gonna have to wait till earnings to find out. The second question is, how much of a margin hit will this do? I believe the Chinese market is already very competitive, and we have seen the reports that because Nvidia can't really send the H100 or the B100 or the B200 to China, this allowed them to be a lot of competition in that space, making pricing a little bit less exciting for Nvidia. They were still just trying to grab market share. So because of the competitive landscape of the H20, in my best guess, I think the H20 wasn't really much of a margin accretive product like some of the other AI chips that Nvidia has. So in the long term, how much of a margin hit will happen because of a loss of this market? I don't think much. I think the biggest margin hit will happen this upcoming quarter when we do see kind of that hit come in on Nvidia's earnings and bottom line numbers, right? And in my opinion, it's going to be one of those one-time losses. Now, the question I also have is, will Nvidia be able to rebrand the H20 as something else to sell to other customers? Maybe a beefed up version of the L40, right? So the H20 was still a great chip, and that's how DeepSeek was able to create some pretty cool AI solutions. Does that allow Nvidia to kind of be able to rebrand it and sell it to the other markets here, either United States or other markets where they might be AI chip light, but they don't need the best of the best chip. Maybe they need something a little bit weaker, a little bit cheaper. That's a possibility. Obviously, Nvidia right now wants to take the best risk approach and is pretty much just writing everything off right now in forms of commitments, in forms of inventory expenses, and then maybe later on we can see if that risk is avoided and they might be able to rebring these H20 to another market. Now, Nvidia is losing a good portion of revenue, 13% of its total revenue. Remember, some still came from the consumer goods. Are other markets ready to pick up the slack? And this is something that, especially with the very weak or very volatile macroeconomic environment and a market where there's a lot of uncertainty, this can add even more to that uncertainty and fuel more fire to some of the headwinds Nvidia could be facing in the short term of things. Now, the next question is, what will this do to China's AI innovation? Will it fuel more competition to be born in China? I think so, right? I think, like I mentioned, whenever you want to starve a country or something with what type of product, you just want to starve it enough where you can still beat the competition. That was the H20, but you don't want to starve it completely where now you're forcing their hand to develop something else. But again, that's just my thought process. I'm not someone that deals with national security, but that's how my mentality works. Now, the next question is this just a trade mechanism for Trump or a true fear of national security? And this is very important things, right? Because meaning, is it reversible? If it's a trade mechanic for Trump, then it is definitely reversible. If we kind of saw, right, that China did kind of, maybe this could be one of the things, suspense rare earth exports. Could China be like, okay, we'll turn this back on or whatever else, and you turn back on this AI chip, the H20? So if it's just a trade mechanism, this market can come back online. If it's more of a fear of true national security, the chances of it turning back on are slim. And obviously, honestly, with the current administration, I don't know which one it's leaning for. Normally, I would think it's more true fear of national security, but the way things are moving right now, it actually could also be a trade mechanism. I would love to hear from you in the comments to let me know which one do you think it is. Do you think this is going to be reversible, or it's a complete ban for the foreseeable future? Now, things to watch. If you are curious, obviously Nvidia's earnings are going to be the only ones to give us the true answers, but that's not happening until at least 2 months away, I believe. The two things that I think could happen, could be crucial, is first TSMC earnings, and this is upcoming this Thursday. They are going to update us on any changes with CoWoS, which is an advanced packaging. This is very kind of purely in the AI chip market. So it's a huge AI chip indicator. So is there any update to this? TSMC, I'm going to say I am hopeful that they have always been honest with the market. And I think that market, that honesty is going to continue. So for that reason, I am going to be listening to TSMC's earnings very strongly. The second is obviously big tech earnings. We do have Google next week. Any updates on CapEx commentary, especially during this weak environment? And I think if there was ever a time where there could be some headwinds for Nvidia at the moment, this trade tariff, these macroeconomic uncertainties is the perfect storm for that. In my opinion, though, that is more short-term lived. Unfortunately, short-term could be a few quarters or so. As a long-term investor, still very bullish, but I do expect a lot of volatility for this stock right now. So I have no intentions of selling. Obviously, things can change at like no tomorrow. Some new AI solution can come up out of nowhere. The demand could continue to explode dramatically. So it's the AI market right now, the semiconductor market, not just because of AI innovation, that alone, it could be a catalyst dramatically and also maybe a potential risk in the future. But with the uncertainty happenings in the real world, with all these trade tensions, that is also adding to either potential catalysts or potential downfalls, right? The catalyst could be all this ends and everything goes back to normal. The potential downfall is it could get even heavier and heavier, creating very macroeconomic pressures. To me, the long terms are more exciting than the short term, but just wanted to always announce the risk. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.